Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Cornelia Meyer, Chairman and CEO of Meyer Resources. Lovely to have you with us today, Cornelia. A lot to talk about on these energy markets today.
Yes, thank you so much, Diala, for having me. And there is a lot to talk about.
Absolutely. Let's start with oil prices, because of course we've seen quite a dramatic shift in those in the last week or two, principally in reaction to this whole tariff scenario that's emanating from the US. But we see average prices now $10 to $15 lower than they were even just a year ago. That's a massive amount of volatility and a massive change, especially compared to relative stability in the last few months before that. Do you see us continuing to have this uncertainty on where the oil price would go, or have we settled into a new normal, do you think, range?
I'm not sure we've settled into a new normal. When you have these gigantic shifts, what happens is volatility, right? The VIX in the stock market always goes gangbusters, which is called the fear factor, right? And what we've seen with oil, we were at 75 before Liberation Day. Then we were below 60. Now we were teetering around the mid 60s again. So that's huge volatility. And that's basically the worst thing that you can imagine, because it's bad for producers, because it hinders investment in the sector. Who wants to invest in the face of such uncertainty? It's also bad for consumers. Imagine you're an airline and you don't know from today to tomorrow whether fuel is 70% or 30% of your OPEX, of your operation expenditure. So that is really very bad. And what we had so far was OPEC really helping to stabilize it. OPEC was really a force for good, trying to make sure these ultimate swings didn't occur. But when you have every other day a new announcement coming out of the White House on what tariffs will do, what tariffs won't do, and people worrying about a recession or no recession, and supply chains, how do you realign a supply chain in line of such volatility? It's very hard for OPEC to counter that.
Yeah, I mean, as you said, so much volatility, so much uncertainty, and yet OPEC, as you said, they have been credited very much to stabilizing this market in the last 2-3 years through their cuts, management of their volumes, at least, while others outside OPEC continue to increase with a relatively good price. But interestingly, OPEC's timing also, I mean, maybe previous to the tariff rhetoric, had planned to increase output from April. But of course, they've doubled down on that now, and they're increasing even more. They've announced in May at a time, obviously, when the price has been dropping. So do you think this is now, all bets are off, and they're just going to be doing what they need to do for their own interests, because they can't control, of course, what's happening because of all this other factors, influencing the oil price?
Well, I think nobody can control, but when I look at these 400,000 barrels a day that will be put on the market by May, which certainly also had an effect on the downward trend, I see this more as trying to get people in line. Because you had countries like Iraq and Kazakhstan
Yes.
really overproducing, and this is a good way of getting everybody in a row and disciplining. They have tried time and time again to discipline the waywards in OPEC Plus, and I think this is probably a good time to do it. And I see this more in that context than in the context. Never mind, the announcement from OPEC Plus of the 400,000 barrel came before the so-called Liberation Day.
That's very true. I mean, sticking to OPEC, as you said, now they're getting a bit more disciplinary internally. There was these compensations, obviously measures that have apparently starting to kick in, and compliance, apart from Kazakhstan, was improving, perhaps you could argue, at least up to the end of last year. But let's talk a bit about, as you said, in the context of the oil price, investment, capex. liquidity for new production non-OPEC countries. Like, for example, the US now, with Trump saying that he wants them to keep drilling, and yet WTI now we see is dropping below $65. And anyway, the shale industry was kind of stuck in a bit of a stalemate, wasn't it? So where do we see the non-OPEC story, do you think, developing going forward with these prices?
Well, the non-OPEC story it will hamper investment, and especially if I look at the shales price. Trump in his inauguration speech said, they had all these wonderful shale oil. Well, you see that at 65, I guess the Permian gets out. At 55, all bets are off all
Yeah.
over the shale space. And there's something that has changed, right? In the noughties, early teens, we had shale going gangbusters. But that was a time when we had very, very low interest rates, when you had a lot of small players where capital discipline didn't really matter for them to get money. Now you have bigger players where capital discipline does matter. In that space, you also have the banks will not lend at those
Yeah.
rates. So yeah, it's nice to say we need cheap oil, but if you want to really have more drilling and if we want to have if you want baby to drill, you need the capital flows to enable baby to drill.
Absolutely. Let's talk a bit about Cornelia demand. I mean, we've talked about supply, the price, demand, of course, the whole China equation that plays into that in terms of oil demand. China having a weaker sort of outlook set in place the last year or two. But again, given in the context of the tariff war and these potential reciprocal tariffs kicking in a couple of months more so than already, is the oil market nervous that the tariff situation will weaken demand from China even further? I mean, the recent indications actually are not that negative, in terms of how much oil it's been taking in. What's the outlook for China demand and how much support it can, lend the oil market this year?
Well, I think it will be less. Look, if you take the US is the largest producer of oil. China is the largest importer of oil. If you basically do things to the economy of the largest importer of oil, obviously that will have an effect on the oil price and on oil demand. China is always very clever in buying when prices are low. China was also
Hmm.
very this has zero elasticity to the US because only last year only about 1% of its import came from the US. Everything else came from the Gulf, Russia, Iran, and so on. So that's another thing. But when I look at it, the latest PMI out of China were not that bad, but and that was again that reflected numbers before the so-called Liberation Day. So we need to
Yeah.
see what's happening once these tariffs are kicking in. That will tell us more. When I look yesterday, on Monday, April 14, OPEC came out with its monthly oil
Yes.
market report, and I was quite heartened. Again, they played it very conservatively, very safe. They only went down by
Mm.
100,000 barrels a day for the forecast for 2025, from 1.4 million barrels a day increase to 1.3 million barrels a day. You look at the Energy Information Agency, which went from 1.2 million barrels a day to 1 million barrel a day. So people are factoring this in. OPEC is on the conservative side and takes a bit more of a wait and see attitude, which is probably how erratic things are. Probably very smart.
Yeah, absolutely. And of course, we saw that divergence between those two agencies, for example, a bigger divergence last year, perhaps. They're coming closer together in terms of the demand forecast, but still one more conservative than the other. I mean, let's just sticking to China and its imports. Cornelia, you touched on Iran, you touched on Russia and Middle Eastern crudes. The sanctions story, again, is evolving potentially now with Trump's policies on Iran. Are we going to see maximum pressure take effect? Russia is this, it doesn't look like anywhere close to that we're going to get a ceasefire given recent developments, but let's say we did. Um, future of these oil flows that have again set new patterns in the last year or two, do you see a change in the Iranian oil flows to China at all, materializing, or not really? Effectively, China will do what it wants and continue to take that in.
Well, look who is supporting Iranian crude. It's the so-called teapots, the small refineries which are in a banking system totally removed from the Western banking system, totally removed from SWIFT and so on. So they could so far do as they pleased. Now, with tariff negotiations, I don't know whether that comes in. It could be,
Mm.
Trump likes to link things, right? He likes to link defense to trade to sanctions. So it may be that they will give some, because what the biggest thing at stake for them is exports to the US. It may also be that they say, look, we've given up on the US, and we just do as we
Yeah.
please. So we will have to see what happens when President Xi meets President Trump, and when the negotiators get together.
And what about Russian oil then? We've of course that's continued to flow for good reason, because the price caps were designed and the sanctions were designed so that it would continue to flow, but obviously under certain restrictions. Um, have those been a complete failure, do you say, the sanctions on Russia, or have they succeeded in any way in terms of the attention from Europe or US? Again, what do you see going forward this year in terms of how those might be impacting the Russian economy and Russian production at source?
Well, I think Russia is in many ways, Russia has realigned its flows, and it's imported to India. You will probably
Mm.
see that India may import less. Look, Russian crude imports from Russia in India went, when the sanctions kicked in, from 2% to 20%. And then the HPCLs of this world and the Reliances of this world, we find it and send it as Indian gasoline back to Europe. But you saw that they're starting. India will probably start to follow what the US wants it to do. However, what I've seen so far
Mm.
from President Trump is he's not been that tough on Russia, and I wonder whether there's this bromance going on between President Putin and President Trump. So I wonder how strict he will be. Obviously, he can influence. But he also can't take Russia totally out of the equation. And when you look at what this meant for Europe, and not just on oil, let's talk gas as well,
Yes.
in terms of the production costs. I mean, if you're a steel producer, an aluminium producer, your energy costs have been off the charts, and now you're stuck with tariffs. I mean, this is just it's just deplorable.
Yeah, absolutely. I mean, Europe, let's talk a bit about Europe. It has had a hard time, hasn't it, for a year, for 2, 3 years. You had the cost of living crisis with the gas prices 2, 3 years ago. Then things calmed down a bit, I suppose. Again, it's learned to wean itself off pipelined Russian gas mostly. But again, a lot of people in Europe still saying that if we were to have, normal relations again with Russia one day, that they'd be willing to go back and take more of that Russian pipeline gas. What's your opinion on that? Is that going to be, do you see that scenario again? If they need a good price, they'll take whatever source they can get. Or will Europe continue to build its independence from Russia, taking more US LNG, etc., and other options?
I think there are two forces at play here, right? One force is the people who say, okay, we need to be more resilient. Russia really is a threat. That's one side. But then there is the other side, which is different, because the producers of steel, whatever, glass, they say, look, we need more affordable gas. And then there is a third thing, which we have thrown all the environmental concerns out of the
Yeah.
window with these geopolitical things. Pipeline gas is environmentally much better than LNG that has to be shipped halfway across the globe and is produced with shale gas. So there's that component, which at this point nobody seems to worry about, but at some stage that will kick in again as well. So Europe will have to do what it has to do, and the question is just who is more vociferous in the very long run. I don't see the world being able to live without Russian gas, because when you look where the gas is, right? It's in Russia. Some of it is in the US, some of it is in Qatar, and in Australia, Indonesia.
Yes.
But at some stage, especially as we will have 2 billion people more on planet Earth by 2050, at some stage, which is not that far off, by the way, 2050. At some stage, we will need all the as the Secretary General of OPEC keeps on mentioning, we'll need all the sources of energy we can get our hands on.
Absolutely. The and mantra coming out of the UAE here from His Excellency Sultan
Yeah.
Jaber. We need everything, all types of energy. I mean, you mentioned the transition and Europe. I mean, just let's talk about that in a bigger context of the sort of what we sense is a slight pushback against that. The last year or two, as energy security has become again back to the forefront, the cost of the transition again hitting economies hard, including Europe, which was definitely at the forefront of that commitment. Would you say that that has taken a slap in the last year or two, and what is its trajectory going forward, investment wise and commitment wise?
Well, I think it has taken a slap because it was also unrealistic. Remember in 2020, I think when the IEA came out with its path to net zero, that was just, and the IEA said that all investment in fossil fuels should stop. And they had to retract because, again, we will have 2 billion
Yes.
people more on planet Earth. So we need to provide them with energy. We still have about, according to the World Bank's, 700 to 800 million people living in energy poverty. So that is really a big. I think that's a big thing. It has taken a slap. But in the long run, we will have to do something on the environment. We have to be smarter and more realistic. And I think where we will see things happen is when security teams up with expense, right? When you want to be more autonomous in your energy production, and you have good wind production, you have good renewables, you have nuclear and so on, you have a good mix there, and you can get prices down. So if you get security together with cost, that's very powerful. And we have essentially been in an energy transition since the first oil shock. And we've come down from sort of 95% of sort of fossil fuels
Mm.
to 81% of fossil fuels. That's since 1976. That's over a long time. That shows you how long haul that is. But you saw big spikes in that, during the 1976 oil shock, when Japan suddenly did a lot more on gas, when you saw France going nuclear. I'm not advocating nuclear by any way, shape, or form, because it's extremely expensive. But
But it's
when
making a
if you
comeback.
can
It's
afford it, fine. If you can't afford it,
in the
there is a
Gulf,
there is a problem.
even the Gulf countries are investing in nuclear. Yeah,
Exactly. But the Gulf countries can't afford it. That's the difference. Some other
exactly.
countries who talk about, oh yes, let's turn to more nuclear, you have to go, hey, wait a minute, look at the cost here.
Yeah, absolutely. I mean, you mentioned energy poverty, and of course, a big six chunk of the world still in energy poverty and needing affordable energy. But let's talk a bit about the first world and energy demand there, specifically in the power sector, which is obviously on the increase, and with the technology absorption of that, all these data centers that need more power, that investment into that sort of sector is also booming as well by the likes of companies like Microsoft and Nvidia, etc. Is that a challenge, do you think, for the power sector to keep up, given the pace of the tech infrastructure that we're seeing, which is
It,
unstoppable, isn't it?
It is a humongous challenge because you see the tech sector, which has unstoppable, as you said, unstoppable demand, and people say, "Oh well, then we can move this online, that's online." Well, yeah,
Yeah.
I shudder to think how much this conversation consumes in
Yes.
terms of electricity. But the other thing is also at the same time we have, especially in Europe, you countries like Switzerland, Germany getting out of nuclear. So taking out in the case of Germany, 40 so odd percent, they say, okay, we don't want to do coal anymore, although you can do CCUS and make coal totally clean, but never mind. And then at the same time, they're keeping putting on and on and on in the drive of becoming more environmentally friendly. Yeah, we have heat pumps. Well, what do they use? They use electricity. They use a lot of
Yeah.
electricity. You have you will have arc furnaces which will use electricity. All the EVs that we want to have, although even the country that did best in EVs, which was China, is now moving more to hybrids away from
Mm,
EVs,
mm.
which I think is a very interesting development, which comes from the fact that, yeah, if you tell a car has a range of whatever 600 kilometers, if you then put in aircon, radio, what else, light, and so on, you're down to 200 kilometers. So which is, in other words, we're just expecting the electricity sector to be there, and we haven't built in the redundancy, especially not in Europe, and also not in the US, that we need. And I would just go back to the early 2000s. Remember being the first sort of tech revolution
Mm.
when the lights went out in California because they didn't have enough electricity.
Okay, well, I mean, you mentioned California and the US again. Let's circle back to the US in terms of this whole tariff war. Again, as you said, we're yet to see all these things play out if the reciprocal side of things with Canada, with Mexico, with China, with the whole world, of course, from the Trump's perspective. From a US economy point of view, do you feel, as has been the rhetoric in the last few weeks, that we could now this year actually be seeing possibly a recession? We've seen GDP forecasts downgraded for the US this year and next. And now that, that soft landing that happened last year nicely will not necessarily carry through to this year. So from a Fed policy point of view going forward and how it manages things, and from this tariff trade war, is there a nervousness that we could see the US economy really effectively slow down?
I think there's tremendous nervousness, and not just for the US, for the whole world. When during the election, during the campaign, when Trump sort of came out with this moniker that tariff was the most beautiful word in the English language, the IMF came out and said, "Look, if he makes true on what he wants to do on tariffs, that could take 7% out of global
Mm.
GDP, which is the equivalent to one Germany and one France." I mean, if you put it in those terms, that's quite stark, right? So in those terms, yes. And for the US, there's another thing. It will be highly inflationary because
Yes.
if you go through a Walmart, if you see all these products that come from China, from other parts of the world, well, if they're suddenly, more than double in price, that's quite something. And if you also look at the tech sector, their supply chain, Nvidia,
Yeah.
is supply chain is highly dependent on China, and Apple iPhones are essentially done, made in China, right? So your iPhone will be getting a lot dearer.
And no one's going to pay more for iPhones than they are already. Cornelia, before we let you go, let's again back to Europe where you're based. And you mentioned Germany and France and their economies, but I want to just get your perspective on the new sort of spending initiatives that Germany has taken, obviously, in response. On the defense side, obviously, in response to the Ukraine issue with Russia, but also just this whole tariff equation, and is that going to bring Europe together a bit more? And in terms of an expenditure on a debt sort of outlook point of view, do you see that as temporary now, a reaction from the likes of Germany, or is this a new beginning, do you think, for the EU economy in becoming really sort of truly more independent from the US and on all fronts?
Well, I think it's been a big wake up call. The Ukraine Russia conflict has been a big wake up call, and people are putting more money into defense. And you know, the US has told for a long time they should put more money in, and
Yeah.
they're finally seeing the light. So we've seen that. We've seen Germany they have this debt ceiling. They have thrown that out of the window. And they want to do more investment. And Germany direly needs investment in the railway infrastructure, in the road infrastructure. The bridges are crumbling. They really, really need to invest now, and that's all good. So the debt ceiling is out. But will it really happen? Because when I see they have this new coalition contract, and there was big rah to sign it. I then see, I now see divergent voices in these with the Social Democrats and the Christian Democrats and the Christian
Mhm.
Socialists, the three coalition partners. So we'll have to see how they'll get together. One thing though is if Germany gets rid of the debt ceiling, they may be a little bit more willing in having, euro bonds issued by the EU. That may be a case. And let's face it, the Russia war has brought, or the Ukraine war has brought NATO to work closer together, much closer together than they've done since the Cold War. And the tariffs are bringing Europe to hopefully work together a little bit more.
Okay, and Cornelia, so on that front of bringing countries together and also driving countries apart, that the U.S. policy right now is changing and sort of pushing relationships in different directions, isn't it? For example, a lot of talk now about Europe, which we've talked about, coming closer to China, maybe them sort of colluding at some point unofficially in terms of their response on tariffs, for example. But let's just take that into the energy space. I mean, is there a new energy world order taking shape, would you say, for different reasons? One, because we see the sort of growth of the global south, but also because of the policy of the West and the US in particular. Do you see major shifts that we will witness going forward in the next 5 years or so?
I would be, first of all, be careful about Europe colluding with China, because Europe also sees China. Europe was totally pro-China in 2015, and they have, in
Mm.
the meantime, sort of they have softened their approach, or they have cooled their love affair quite a bit. I see whenever you see things like that, you see a realignment of trade flows. You know that when the shale boom happened, what you saw is that um, uh, Nigerian LNG went rather to Europe and to Asia, no longer to the US. So you always see, you will see a realignment of trade flows, and you will see a realignment of energy flows. And what I would really see there is we have so far seen that for the next 2, 3 years, we saw non-OPEC plus countries to grow their
Mm.
supply significantly, and they will. But it also depends on, how stable prices are, because if you want to grow production, you need investment, right?
Absolutely, and I suppose it's the low-cost producers who will win out in the end if we remain at
Always.
these levels. Cornelia Meyer, Chairman and CEO of Meyer Resources, thanks so much for joining us today on Halftime Talk. It's been great to have your thoughts and insights.
Thank you so much, Dalia. It was great to be on.
Great
Thanks.
to have you.